Hey traders, John Howell here. Today I want to teach you about how the actual markets work, how the charts work, and so therefore you can understand what is happening, what sort of phase we're in right now, what could be coming up, and also to help you have a better understanding so you're not surprised by what's happening with the markets, and also help you when it comes to much better entries points in the markets here. So that's what I want to really share with you today. And the reason why is because I was actually, as of doing this video for you today, I was doing a live stream today, and I realized that a lot of people that are new to the market, the untrained eye, some people don't understand how the actual markets work. Like, how do they actually really work? So you understand there's a couple of different phases that the market goes through. And if you understand there's two different phases that the markets go through, and if you understand what type of phase you're in, you can understand what's coming next, right? And therefore you can anticipate whether it's a wrong time to get in or whether it's a time to get ready to get in. And I see this a lot when the untrained eye, for me personally, I have been trading the markets now for almost 20 years myself. And it's something that I've learned about how the actual markets work itself, and why the untrained eye or the uneducated eye, who, say for example yourself, if you're a person that just wants to watch YouTube videos looking for the quick tip, but not really educate yourself on how the markets work, you're missing a big thing, right? Because if you're not educated around how these markets actually work, well, then you're probably running the risk of probably buying high and selling low, right? Like, there's so many amateurs that would buy and then the market would drop and you'd get out and then the market would go back up. You're like, how's that? Why does that even happen? And the reason why is because it's just a simple process of how markets work. Now, the untrained eye or the uneducated trader or investor, and that's not a putting you down term. If you've been part of the markets now for maybe 2 or 3 years, you might be in this camp still, okay? As I said before, I've been trading the markets now for 19 years as of doing this video. Next year will be 20 years for me. And it took me a long time to understand this process. And this is one of the keys that actually caused me to lose $250,000 in the markets. Now I made all that back and so much more since then. But the thing that I realize and understand is that I didn't understand that there were really two different types of phases in the markets and how the markets work. So let's actually go through here. So how the markets work is we generally go through different phases. We generally go through 3 different types of trend analysis, okay? We go through an uptrend, which is higher lows and higher highs. We go through downtrend, lower highs and lower lows. Or we go through no trend, which is just doing something like this. Now, if you've been trading for the while, you're like, no, John, I get that. Okay, all right. Now let's actually go deeper into these analysis. If you do know that, then you would know that if you actually go deeper into these trend analysis, you would understand the type of, there's 2 different types of phases, right? If we're going sideways, well, there's really only one phase, and that's sideways. There's no real, this is not talking about trending markets. This is markets. When there's someone in control, either there's a bull trend or there's a bear trend, right? There's someone in control, right? Meaning the buyers keep buying it up through the bullish trend, right? The buyers are in control and they keep buying it up and buying it up and buying it up. If the sellers are in control, meaning the big boys are selling it, they would sell it, and that's what causes the trend to be in place. Makes sense? So what we're looking at here is this, okay? What we're looking at here is this, is that if we understand that we have that there, that means someone's in control, meaning the big boys, okay? Are the big boys clearly in a trend here? Are we clearly in a trend, up or down, or are we not, right? So for example, if as I'm recording this video for you, the Russell would be an example right now where there's no one in control, not yet, right? The market's going up and down, up and down, up and down, right? Now, someone might say, oh, but John, the Russell did this and now it's doing that. The buyers are in control because we've had this big move up. We might have that leg up, but there's no, that that is true, but we're not actually in a very strong trend yet, right? What is a strong trend? Strong trend is what we see over here. So now we've got that sort of ground basis there, okay? Understanding that, okay? When there's no one in control, that's a very low probability time to be actually looking to enter a trade, because it's like, is it going to go up? Is it going to go down? Are we going to break up? Are we going to break down? We don't know, right? So one of the worst times to be entering a time is actually when there's no clear sort of trend analysis in place, right? No clear trend analysis in place. It's very, very, very risky. So therefore, the best time is to identify when there's actually a trend in place, which just consists of higher lows through here or lower highs. Okay. And then going with that. Now let's actually dig deeper into how these markets really work. Okay. So we now understand trend analysis, and you probably heard that a million times, but let's actually dig a bit deeper in the reason why most people actually lose money in the markets. All right. So if we understand this, let me take everything off the screen here for a minute, and I'm just going to, let me minimize, let me actually pull this up here for a minute. Right, so I want to do this here for you. So there's, as you know, what is a bullish trend, right? It goes up. Let's actually do this here, right? So it goes up through there. We might get a pullback. It goes up. It might go sideways for a bit through here, right? Then it goes up again, and we do something like that. Makes sense? So there's this is a bullish market, right? If you know the markets for a few years, like that's a bullish trend. But now let's actually understand why most people get it wrong, and how you can start to stack the odds on your side of actually doing much, much better in the markets. Because I want you to succeed, right? And so the big thing for me is that there's two different types of phases the market goes through. It's what I call an energy using phase or an energy building phase. The energy using phase is when it's actually moving in the direction. See how we have a move up, strong move up, strong move up, and a strong move up, right? We go through, the market goes through an energy using phase, and then we go through an energy building phase. An energy building phase could be either sideways like here, or a slight down, potentially like a bull flag type thing, or even a higher low, which if you guys know anything about Fibonacci's, which could then go inside of around the 50% Fibonacci for you guys that know Fibonacci. If not, then that's okay, right? So if we understand these phases, then we can understand what's going on, two, what's coming next, and three, is it a right time to be entering, or is it a time to stay out? So if the market is starting to move up, right? The market's going up, and the market's been going up for quite some time. What would you be expecting as the market's starting to go up through here, as it's been going up for quite some time through here? What would you be expecting? Oh, we've been going up on this leg through here. And now, guess what? Because the market's operating in a way of, we go through an energy using phase, which is mean we have a directional move. And then we do what? Then we actually end up going through an energy building phase, which is more like maybe a bit of a pullback, a bit of a drop here before we continue the trend, or a bit of a sideways range before we the trend, and so on and so forth, right? So the reason why I say this is that because a lot of people, when people are getting in, down here is when the tank is full, right? If you're using energy, the tank is full. But guess what? We're using energy, and we're starting to what? Up here is empty, right? Or getting on empty before we need to go refill again, right? Either you've been to the gym or you're in a car. Makes sense, right? Do you get what I'm saying here? This is where the markets work. So if the market's been going on for a trip for a while, well, up here, we may be only 10% left in the tank before we have to go refuel, right? Maybe you did a really big gym workout and you need a good day of rest, right? So in that case, guess what? Well, then you know, okay, that there's a resting phase coming, or there's a resting phase, or a reset phase, or a rebuilding phase to get ready to go to recover, to get ready to go for another gym session, or the car's filled up with fuel. We're now getting ready for another trip. Makes sense? So therefore, what a lot of traders do is they will wait for the market to go up, and it'll just keep going up, and then they get sucked into up here, where it might be the last, say, over here, it might be the last, say, 20%. and they wait and wait, and because they're waiting for confirmation, they're waiting to see if it's going to go up. Is it going to keep going up? Is it going to keep going up? And they do that. Again, this is the untrained eye. And I'm not saying anything about the untrained eye. I'm just trying to share with you why a lot of traders get in at the wrong time in these markets. And so therefore they're getting in here. And then guess what happens? The market drops. Like, oh man, how come the market dropped? Because a lot of traders wait for the market to move in a direction. Then they get in, and then the market pulls back. Or it might go, or the market might move. People start entering long here, and then suddenly the market does nothing. And this actually could be here. This actually could be, if this is a daily chart, this could be like 1 to 2 months worth of sideways move, depending on this move through here, right? And then it gets ready to go again. So there's two different types of phases, right? There is an energy using phase, and there's an energy building phase. Energy using, energy building, energy using. So that means after a period of time, and the thing is, we never know exactly when the top's going to be in, but as the market's been using a lot of energy for quite some time, we know that it's getting close to a top. We don't know exactly when that top's going to be, or when that next when the reset phase or the rebuilding phase or refilling phase is going to kick in. And so we never know that. We never know it ahead of time, right? People, you can never predict exactly when this top's going to be in, so you can get out of the exact top, right? So if you understand that, then you'll understand, one, what type of phase we're in. So right now, if I'm looking at the markets right now, you guys are probably going to guess what market this is. But if we are looking at this market right now, let's go look at this. So we had what? We had the market go up, and then guess what? We had a pullback. And the market went up, and then we had a pullback. And then it went up, and then we went sideways. Then we went up, we had a little pullback, we went up, and then we started to change the tune of the trend. And now we've just been going up and up and up and up and up. So the purpose of me saying this, as you can see, look at this here. Sideways periods, the pullbacks through here, right? The reset phases, and so on and so forth. So right now we've had a very strong move to the upside. And because it's been going on for a lot of time, as you know, when it comes to these markets, and if I squeeze my charts up more, as you know, that the market will eventually, even if we go up for a while, the market will eventually get what? A pullback. It goes up for a while, and we eventually get a pullback. Unfortunately, a lot of traders are starting to enter here after it's gone up. Starting to enter here after it's gone up. Makes sense? And so therefore they're getting in after it's been using a lot of energy. And so therefore where we are right now, as an example, because we've already been on this trip for a while, if this was a car and the car was full, a tank worth of fuel here, how much is left up here? Probably not much, right? We may be at probably the 10 to 20% of it, maybe, right? Maybe it might be getting towards the end of that, where it needs to go in the service station, aka it needs to then pause, right? It needs to pause to go sideways for a bit to refuel, or it needs to have a bit of a pullback first, do something like that, and then maybe get ready to go again. Makes sense? And so for me personally, the best times is the best time to be entering a trade to me is after what? Is after when we're in a trend, but after we've actually had a bit of a pullback and get ready to go again. Actually, my favorite pattern is this one here, when the market goes up and then it goes sideways and then we get ready to go again, right? This is where I'm looking to enter here. As we've gone through, we used a lot of energy through here. Then we went through an energy building phase for a while. And then as it starts to break out through here, that's when it's now getting ready to go for another trip, right? Because we're just starting to break out now from what? From using going sideways, which is now rebuilding or re-energizing yourself to get going again. A lot of the traders, especially looking at right now, a lot of the traders wouldn't have been game to get into this trade or get into this market long. So therefore what happens, right? The market goes up and up and up and up and up and up and up. And now traders are starting to pile in here thinking it's going to be continued going up. But since you now know that the market goes in phases, there's inevitably going to be what? The market goes up and there's inevitably going to be either a pullback, The market goes up, or there's never going to be something like this where it may even do something like that, right? Where it may go up a little bit more, and then we do something like this for a while, and then maybe continue up, right? We just never know exactly what's going to happen, but we do know that after a period of energy using, energy building, right? Energy using, energy building, right? We start to go through, especially in these trend here. And so whenever you're getting into it, ask yourself, how long have we been on this move for this period of time, right? How long? Is it only a short period of time, or is it a long period of time? Now, the way that I like to use, if it's used too much fuel, is I like to use a simple moving average on the screen. This is a 52 moving average on the screen, and it doesn't matter what time frame you look at. Just put the 52 moving average on the screen, and you'll notice what? You will notice by looking at this chart that the market doesn't get too far away, too far above it for overbought, or below it for oversold, right? We get too far away, and then we end up getting what? The pullback, or a snap back towards the moving average, right? Get too far away, and then we get, look at even here, too far away, too far away, too far away. Look where we are right now, right? We're getting sort of the maximum distance away has been these ones here, I would say, if you're looking at the maximum distance away before it comes back. Look where we are right now. Look how high we are right now. So there's a big probability that we're getting towards what? The end of this extended move, or this energy using phase. And a lot of traders are getting in now thinking that, oh, this thing is just going to keep going. But if we look at the reality of how the markets work, guess what? We go up for a bit, and then we end up getting what? A bit of a pullback in the markets, or a bit of a drop, just a reset. And then we may go up and continue the uptrend, or we may start a downward trend. And this is where we just go with the flow with the markets. Make sense, traders? So this is a big thing that I really want to share with you, that for me personally, I'm always getting in, not after it's been using a lot of energy for a while, but in this example here, I really like the sideways bit for my trading plan, for my trading system. And I'm always looking for that sideways bit first with the overall trend, right? Which is the sideways bit is what? It's starting to fill up with energy, with fuel. And as we break out, we're now getting ready to release that again. Hey traders, thank you for watching my video today. I want to give you access to my brand new trading course that I've just recently created. It goes into 4 different parts. Part number 1 is about the foundation. This is about the biggest mistakes you're making right now, how to overcome them, what goes into a good trader. This one here, part number 2, chart reading mastery. This is about a technique that's been working since the 1950s. This advanced chart reading techniques, I only learned from my millionaire mentor, not from books or courses. And I'm going to wrap it all around my number 1 trading system that I've been trading now for almost 20 years now as my top trading system. I'm just going to give that to you for free. So if you go to johnsfreegift.com right now, or there should be a link in the description, click on that there right now, guys. Go get access. I'm giving away free complete access. So go